Hello everyone and hello Saradri. Today uh, I am Gerald and this is my partner Calvin. We are going to present about PSAK 02. Okay, our topics first one is statement of cash flow and then the second one is the conclusion. So cash flow report. So it is an information on an entity's cash flow is useful as a basis for assessing the entity's ability to generate cash and cash equivalent and assessing the entity's cash need to use those cash flow. Statement of cash flow describe the historical change in cash and cash equivalent classified into operating, investing, and financing activities during a period. So what is the benefit of statement of cash flow? So assessing the entity's ability to generate cash and cash equivalent and enables user to develop models to assess and compare the present value of the future cash flow of various entities. It also increases the comparability of reporting of operating performance of various entities. It also provides information that enables users to evaluate changes in net assets of entities, financial structure, and ability to influence the amount and timing of cash flow in order to adapt changes to changing circumstances and opportunities. Next. Cash and cash equivalent. So cash is the cash balance and demand deposit accounts. Cash equivalents are investments that are highly liquid in nature, short-term and which can be quickly converted into cash in a determinable amount and have a insignificant risk of changes in value. Investment maturing soon, 3 months or less share are excluded unless preference has been determined. Bank overdraft are included in cash or cash equivalent. Cash flow do not include movement between items included in cash or cash equivalent. So this is the presentation of the statement of cash flow. So statement of cash flow report cash flows over a certain period and are classified according to operating, investing, and financing activities. Presentation of the three activities in a way that best suits the business. A single transaction can be identified by more than one activity. Example, loan repayment and interest, financing and operation. Operating the cash flow. Operating activities are the entity's main revenue-generating activities and other activities that are not investing and financing activities. The main indicator determines whether operations can generate cash to service loan and maintain the entity's ability to operate, pay dividend, and make investment. And there are two, the inflow and the outflow. So the inflow consists of the receipt from the sale of goods or service, royalties, other income, receipt from rental income, tax refund, receipt from gift to bank, and sale of securities from securities company. Outflow consists of the payment to supplier of goods and service, payment to the employee, payment of claim insurance, purchase of securities, credit returns, and payment of operating expense. Reporting of cash flow from operating activities. Applicable method, the main class direct method of disclose gross cash received and disbursement. The indirect method, profit is adjusted by correcting non-cash transaction, deferral or accruals and income or expense items related to investing and financial activities. Next, the investment of cash flow. Investment cash flow. So there are two things, the inflow and the outflow again. So the inflow is a receipt from sales of fixed asset, intangible asset, and other long-term asset. And then cash received from future or forward contracts, future for funding, future for funding. And then receipt from sales of debt instrument or cash, and then cash received from repayment of advance and loan from other parties. And then the outflows consists of cash payment to purchase non-fixed asset, intangible asset, capitalized development costs, and then cash payment for future contracts, forward swaps for financing activities, and then payment to purchase debt, equity, or venture instrument other than for trading. Okay. Investment cash flow. Investing activities are the acquisition and disposal of long-term assets and other investment that are not included in cash equivalent. It represents expenditure for resources intended to generate cash in the future. So the inflow cash consists of the receipt of sales of fixed asset, intangible asset, and long-term asset, and then cash received from future or forward contracts, future for funding, and then receipt of sales of debt or cash instrument, and then cash receipt from repayment of advance and loans from other parties. And then the outflow cash is cash payment to purchase non-fixed asset, intangible asset, development cash costs are capitalized, and then cash repayment from future forward swap contracts for financing activities. And then last, payment to purchase debt, equity, or venture instrument other than for trading. Okay, for the next will be presented by my partner. Thank you.
Okay, thank you, Gerald. I will continue the presentation. Next, we will talk about funding cash flow. From funding cash flow, we know that it was financing activities or activities that result in changes in amount and composition of the entity capital contribution and loans. Also, it was to be predicting claim on future cash flow by entity capital provider. There is two type. First, there is inflow and there is outflow. For the inflow, it was included in cash receipt for issuance of share and also cash receipt for issuance of bonds, notes or short-term or even long-term loans or mortgage. And for the outflow, there is a cash payment to owner for withdrawing or redeeming shares. Second, there is loan repayment. And the last one, there is a cash payment by lease to reduce the balance of liability relating to the payment lease. We go to the next slide. Next, we will talk about reporting of cash flow from investing and the funding activities. Reporting of cash flow and from investing and funding activities, it was reported separately the main categories of gross cash receipt and gross cash disbursement originating from investing and financing activities, except for those that may be reported net of cash receipt and disbursement on behalf of customer if they reflect customer activities more than operating activities. Also, they can receive and the disbursement of item with fast turnover, large amount, and a short time period. Next, we will talk about cash flow in foreign currency. Cash flow from foreign currency transaction are recorded in the entity functional currency by multiplying the foreign currency amount by the exchange rate on the transaction date. Second, the cash flow of foreign subsidiaries are translated at the exchange rate at the transaction date of the cash flow. Third, it was the consistency of the PSAK number 10. The fourth, gains and losses have not been realized due to change in exchange rate instead of cash flow. And the last one, there is a changes in exchange rate are reported in LAK to reconcile the opening and ending balance of cash and cash equivalent. Next, there is an interest and dividend. Interest and dividend, it was interest, cash flow, and dividend are disclosed separately and classified in consistent manner. First, interest expense can be presented as operating or financing cash flow, and interest income as operating cash flow. Second, dividend paid may be presented as financing or operating cash flow, or dividend income can be presented as operating or investment cash flow. Next, we will talk about income tax. Income tax was related by three types. First, the cash flow related to income tax are disclosed separately. Second, classified as cash flow from operating activities unless specifically identified as financing and investing activities. If classified separately, the total amount of taxes paid is disclosed. Next, there is a topic we will talk about investment in associate, subsidiaries, and other business. Investment are reported only in terms of cash flow that occur between the investor and investee. That we know the different investor was the one who give their equity, and the investee was the get the equity from the investor itself. So the cash flow from gain and losses of control over subsidiaries and other business are presented separately and classified as investing activities. Second, there is a disclosure of gain and loss of control of subsidiaries and business. And the last one, it was the reward amount, the portion of consideration that cash in cash equivalent, the total cash equivalent of subsidiaries over which control is lost, and total asset and liabilities other than cash, cash equivalent over which control is lost. Next, there is other provision. Other provision, it was a non-cash investment and financing transaction are disclosed in other section of the financial statement. So, as to provide all relevant information regarding investing and financing activities, and the entity disclose the component of cash and cash equivalent and present a reconciliation of this amount in LAK with the same item presented in the statement of financial position, or we know it as SOFP. Number third, the entity disclose the amount of significant cash and cash equivalent balances that are not used by the group and management opinion. And also, it was already effective on January 1st, 2011. So, from our presentation, there is a conclusion of it. The cash flow information is useful for assessing an enterprise ability to generate cash and cash equivalent and enable user to develop model to assess and compare the present value of future cash flow of various enterprises. Okay, that's all that we can tell about PSAK number 2 from me, Calvin, and also my partner Gerald. So thank you for the attention.